Hey everyone, Couch Investor back to another video for today. So let's discuss Roku's earnings report. If you ask me, it's short of a complete disaster. But to be honest, it was expected, right? After what we've seen with Facebook, with Google, with Snapchat, a big decrease in ad spending, especially on TV, well, was to be expected. But let's have a look at the earnings report. The stock right now is down around 25% at the time of making this video, bringing the stock price at levels not seen since, I believe, 2018, 2019. But overall, the business has obviously evolved since then. Regardless, in the current market environment, obviously when there is a slowdown in the company and an increase also in expenses, even though yes, they are slowing with hiring and expenses, etc., it's an issue and the stock is bound to take a hit. Now, I'm still holding Roku, and yes, I admit it was a mistake to buy it earlier. Hindsight is 2020, but I still believe this company has a great future as a standalone company, or maybe it might even get acquired, especially since it's taking one hit after another. It might reach a very, very lucrative valuation for some big tech company to actually acquire Roku. Maybe even Netflix buys it back. Who knows? But before I go and look at the report, if you want to support this channel, do check out the link down in the description below and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and to check out all the other links in the pinned comment, some of which might actually save you some money. Also, I would appreciate if you leave this video a thumbs up, and if you haven't subscribed to this channel and you want to stay up to date to every big earnings report this season, do hit that subscribe button because an Intel and an Amazon video will follow. So now let's jump into this. Alright, so I'm gonna try and keep it as short as possible. We're gonna go over the key results and then some other aspects that are pretty important in my view. So total net revenue grew 18% year over year to $764 million. The company actually expected to grow 25% and reach $805 million in total net revenue, so a miss on that. Platform revenue increased 26% year over year to $673 million. The platform revenue is more important than player revenue. As you can see here, player revenue has been decreasing year over year. It's now down 19% for this quarter. It's higher than last quarter, but still there's obviously some headwinds in that department there. Then we have gross profit was up only 5% year over year to $355 million. Roku added 1.8 million incremental active accounts to reach 63.1 million, that is. Streaming hours actually decreased 0.2 billion hours and reached 20.7 billion hours. It's still a lot, but you can see here actually a clear slowdown. Average revenue per user grew a tiny bit to $44.10. That's up 21% year over year, but you will see quarter over quarter, not that much. And they surpassed, and this is a very important part, they surpassed a milestone with $1 billion in upfront commitments, which we're going to talk about a bit later about the monetization part and the decrease in ad spending overall. Now, another aspect that they missed on, by the way, total gross profit they missed on as well. They expected 395 million, only 355. Now, adjusted EBITDA also, it's negative here. They expected it to come in at break even, so a miss on that as well. And then obviously adjusted EBITDA margin is negative here. But what I do want to show you is that, well, research and development, sales and marketing, general and administrative, G&A, have all increased quite a lot year over year and even quarter over quarter. And obviously that's an issue, especially if you look at the upper parts, the parts where they actually have to make money. It increased way too fast, whereas the other segments didn't increase that fast at all. So that's something to keep an eye on. And let me skip just a second to stock-based compensation, which is right here. As you can see, year over year for this quarter, well, it doubled. So that's an issue as well. Obviously now they are trying to keep expenses down, slowing hiring, etc. But again, you can see clearly that the pandemic has obviously affected even the best of the top executing managements out there. I mean, yes, we live in a very, very weird type of environment and maybe some things could not have been predicted, But then again, as you can see right here, the increase year over year is just way too much, especially when the business doesn't grow as fast. All right, and now a bit about the account acquisition. So as always, they tell us that the Roku operating system remains the #1 smart TV OS in the United States. In Mexico, it's the #2 selling smart TV OS and the #1 license behind, I believe, Samsung, as always. Now, as for content distribution, and this is an important part, we've talked about this aspect a long time ago when we talked about Netflix and the switch from linear to connected. When will that happen? It will happen when sports starts to move from linear to streaming. And this is exactly what is happening here. If you live in the United States, you probably know that NFL Thursday night games, Friday night MLB games, NBA finals, next season MLS, maybe even NFL Sunday Ticket will all move to streaming. And that's very important because that's probably one of the main reasons why people still have cable TV, and that's because of sports. And as for the Roku channel, it's once again the top 5 channel on the platform in the United States by active account reach and by streaming hour engagement. So that's great. Again, the Roku channel is a free channel, but it is ad supported. Now I'm skipping some stuff here because I do want to touch on monetization, and that's the big part, and basically maybe a half explanation to why this quarter wasn't that great. So they talk about, well, the growth here, platform revenue increased 26%. Okay, fine. This growth was lower than expected as many marketeers abruptly curtailed or paused advertising spend in the ad scatter market during the latter half of Q2. According to a survey by Advertiser Perceptions, 47% of advertisers in the US say they made in-quarter pauses on ad spending on TV streaming, 44% on digital video, and 42% on legacy pay TV. We believe this pullback mirrors the start of the pandemic 2020 when, well, there was an obvious drop and stop of basically spending, when marketeers prepared for macro uncertainties by quickly reducing ad spend across the platforms. Now, comparing 2020 to what is happening right now is a bit dangerous because remember, in 2020, things rebounded extremely quick and ad spending even increased and accelerated during that recovery because, well, everybody was staying at home, so what better way to target? It's not going to happen right now, in my opinion. But there is some good news, and this is the one we've talked about at the start. So despite a challenging ad environment, we closed upfront deals for the 2022-2023 TV season with all 7 major agency holding companies and surpassed a milestone of $1 billion in total commitments. We continue to take ad dollar share away from traditional TV. Our negotiations with brand advertisers occurred at the same time as the broadcast networks, signaling a strategic shift to TV streaming, and 25% of all advertisers who committed to Roku during the upfronts were new commitments, which means they did not participate last year. Now, if you've been following this channel, you probably know what this is. We've talked about their partnership with Walmart, their partnership with Shopify as well. So these are shoppable ads that you will see on your TV. Basically, you can pay with just a click of a button. On OK, you pay through Roku Pay or some other options there, but obviously preferably through Roku Pay. So that's a nice little addition, I would say. And now this is why everybody is bullish on advertising through TV streaming. But there is still some work ahead. So this is viewership versus ad budgets on TV streaming. So basically, they say here that between the ages of 18 and 49, they spend more than half of their TV time streaming, while advertisers are expected to spend just 22% of US TV ad budgets on streaming in 2022. And on the one side, it makes maybe a little bit sense because they're not familiar with the advertising on TV streaming type of platform. But on the other side, if they really want to target very well, then they should start to switch to, well, increase that it wouldn't just be 22% because it doesn't really make sense when it's 50% of TV time spent on streaming by customers, which are probably, let's say, the future, because 18 to 49 life cycles are pretty long. And then we're going to end here with a little case study. So a company called Finishing Touch Flawless, they wanted to find new customers in the beauty category. So the direct-to-consumer brand launched a campaign on Roku's OneView ad platform. We've talked about that in the past. So basically, I'm going to skip everything else and show you the results here. So 38% lift in this company's sales, and 95% of incremental sales were from new customers. And that's the power of Roku's OneView ad platform. That's the power of, well, advertising through a more connected platform, connected TV in this case. And now as for the outlook, obviously it's still very negative because of the economic environment, the inflationary pressures, now officially, not officially recession, because maybe we're going to redefine the definition of a recession. But they expect for Q3 total net revenue to increase approximately just 3% to $700 million, which is down quarter over quarter. They anticipate total gross profit of roughly $325 million and adjusted EBITDA of negative $75 million. And to end this misery, they have withdrawn their full year revenue growth rate estimates because of, well, the uncertainties in the market. So there you have it, that's Roku. Not gonna lie, not a good quarter at all and not a good outlook as well, but it was expected, right? Especially in the segment that Roku operates in the current market environment, it was expected to happen. Should I have sold? Maybe, but then again, I would be trading and I would be saying this to any other position as well. So right now, same thing here applies. I'm not going to add to my position. I'm not going to sell either. Why am I not adding if it's down so much? Well, it can go lower even more. Now, obviously, do share your thoughts down in the comments below. Stay tuned for the other videos, probably first Amazon, then Intel. And then obviously, if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye-bye.